Pension shortfall for when you retire, whether you're a professional or business owner, this is typically the case. Let's take an example. I'll explain to you why. And it's not the reason why you think and what fund managers and wealth managers want you to think. Okay, so what I've done an example where let's say you say when you retire, you want to have £60,000 per annum. Now, you might say, well, that's a lot. Fine, you could reduce it. We'll come to that later. And let's say you're about 50 years old for the moment and you want to retire by 62 and can play around with those numbers as well. And let's say you're doing your full pension contribution of 5,000 a month at the moment, or 60,000 into your sipp currently. And your current pension savings are around £200,000. Well, you're going to be well off target because you want 60, you're going to end up with 30. You might say, well, that's fine, I can live with 30. And let's have a look at what the problem is. And it's hidden in these online calculators. Low down. Potential growth rate, medium. Guess what they put down as medium? 5%. Well, hang on. My bank pays me 4.5%. So why are they getting me medium at 5%? What's worse is high. High growth rate, according to them, is 8. My bank pays 4.5. Okay, let alone the NASDAQ was up 55% 2 years ago. Last year was up 25%. The S&P was up 25% last year, and the year before roughly 30%. They're talking to me about 8%. By the way, the long-term S&P 500 return over the last 10, 15 years in sterling terms is 15% per annum. They're talking to me 8%. So what they're trying to get you to do is increase your monthly contributions. Well, of course they are. They get more money if you do that. Delay your retirement. Of course they are. They get more money because you've got your money with them for longer and paying them fees for longer. Or just lower your ambitions and targets. And that's been the British disease. Just lower your eyesight. Don't be like the Americans. Well, actually, your sipp and ISA, you can be more like the Americans because certainly their pensions are more lucrative. I'll tell you how we do it, and what we think is a far better way of doing it is to actually put you in control. You have your own sipp and ISA with whichever provider you want. We'll give you the data to see out of 10,000 companies and 7,000 funds, which ones tick all our boxes and are all green. Out of 10,000 companies, about 200. Only 200 would meet the criteria of the kind of 40% projected growth and volatility below, say, 15%, which, if you don't know what that means, is pretty low volatility for an individual equity, let alone for funds where you can have under 10% volatility. That, we think, is a far better way where you're in control of your money, because nobody cares about it more than you do, with the tools needed. Okay, well, get in touch. I look forward to speaking to you. Thank you very much.